Hello, everyone. Welcome to the Mortgage Leadership Outlook. I am Andrew Berman from National Mortgage Professional and Mortgage News Network, coming to you live from the M&N studios, right here in my basement. It's our temporary makeshift studios. We've been coming to you live every day at 4 o'clock Eastern Time, 1 o'clock Pacific, Monday through Thursday, bringing you some of the biggest leaders in the mortgage industry, just people actually who have been shaping, the industry, bringing actually to you news to let you know what's been going on inside actually the biggest names in the country, in the industry. And today is another example of that. So with us today, I'm going to bring my buddy Terry Clemans. Terry is hold on for a sec. I'm bringing you in one more time. There we go. There he goes. Terry Clemans is the executive director for the National Consumer Reporting Association, which, I mean, this is obviously Terry is at the center of this all, because one of the things that we've been talking about here more than anything is the forbearance, the ugly forbearance, and the fact is actually that the uncertainty that's going to be presented to us in the forbearance, and a lot of that is manifesting in the credit reports, which is what is Terry, his area is focused on. So Terry, listen, before we get started here, please, if you're joining us, we love to know actually where you're connecting on. So I do see a handful of people here already on from Facebook. We'll get a couple of friends joining us on YouTube and Twitter. But just please, let us know the city and state that you're in. So if you can, use the comment box. Let us know the city and state. If you are watching this on the replay, make sure you like us and follow us for the future so you get these live updates as they happen. Again, we're doing them every day, 4 o'clock East Coast time, 1 o'clock Pacific time, Monday through Thursday. So Terry, tell us a little bit about, what is the National Consumer Reporting Association and who are your members?
Thank you, Andrew, and thank you for having me on today. And I always enjoy working with you and your group. Wonderful people, and I really appreciate the opportunity to help clear up some of the concerns the industry has about how COVID-19 is going to impact credit. NCRA, the National Consumer Reporting Association, we are a trade association for the housing consumer reporting industry. So our members are the reseller credit reporting agencies that provide the credit reports and background checks, the specific information needed by mortgage lenders and landlords and property managers to make decisions about housing, whether it be mortgage lending or resident screening reports. Any decision for housing, rental or purchase comes through many times an NCRA member company.
Fantastic. And to give us an idea of the makeup of the membership. Are they the big companies? Are they the small companies? I mean, who are the typical members? The credit reporting agencies that are NCRA members.
Well, they're the resellers. They're not the big three credit bureaus, the TransUnion, Experian, and Equifaxes. They're the reseller consumer reporting agencies right there in your backyard, CIS, across the river in New Jersey, and scattered throughout the country. The companies that provide the tri-merge credit reports and the resident screening reports. There's about 40 companies in the mortgage side, and then there's about 150 in the resident screening world that do these specialty, unique credit reports for housing.
Great. And I mean, what was the genesis of the organization? Like, why was it originally created? What was your original mission?
27 years ago, there were these companies that felt their voice was missing, that there was specific issues to the mortgage credit reporting industry and the resident screening industry that were not being vocalized, that were a little different than the big three bureaus. And that's why NCRA was created, and that is the mission we continue to carry out today. While on issues like this, we are in lockstep with the big three, sometimes things are a little bit different as it pertains to the differences between a reseller that is defined in the Fair Credit Reporting Act as a 603U company versus the National Credit Bureaus defined in the FCRA as a 603P entity, because we do have completely different missions. different charters and are held to, well, we're all consumer reporting agencies. We do have specific roles defined in the Fair Credit Reporting Act that are unique to each of us.
And so what's the role that you serve for your members specifically? Like, so if I'm actually an NCRA member, why would I be an NCRA member? Like, well, what are you doing for me as an NCRA member that 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 wasn't being done before, or that's not being done anywhere else?
Well, we help them out with education and compliance, and are focused strictly on their issues, their unique issues, dealing with legislation, dealing with regulation, dealing with the press like we are here today, and helping them guide through, hopefully most of the time, much better waters than we are trying to help them navigate today. But there's always something in our industry. There's never a dull moment, and I've been in it now for over 30 years, and there's never a lack of something to get me up in the morning and get me focused on what is going on in our world. And unfortunately, right now, it's the craziest it's ever been.
So now, what was the last big thing that you guys were working on that was of a concern, that you guys were like, oh my goodness, how are we going to get past this? So what was the last big issue that that the credit reporting agencies felt was something that was either going to impact their business negatively or potentially a positive opportunity?
Well, COVID related, one of the things that we're struggling with right now is access to the records on time. With the lockdown and the limited working capability of everyone, we've got specific timelines in the Fair Credit Reporting Act that we have to respond within, and with public record items, and especially on the side of the resident screening world, needing access to the eviction records and criminal history records. So many of those courthouses where you need to go in and physically do a manual search, those are missing. Those are on limited hours. Some of them are available online, but you got to understand. And one of the things we participated in December, the CFPB and the FTC did a joint session on credit reporting accuracy. They did a big all-day program, and I was one of the people that were invited to speak at that. And we addressed that specific issue about public records, and are trying to address some of the concerns there, because with over 3,000 different counties, and then when you take a look at all the Indian reservations and like the boroughs in New York and the different areas to collect public records, you have 3,500 different entities with 3,500 different budgets and different perspectives as to how they are going to collect, gather, and disseminate that information. So that creates a variety of challenges, and that's one of the things we addressed very recently. Addressed it COVID-19 related, and then addressed it recently, at the end of the year and going forward. We'll continue addressing getting consistent access to that data, because there are, right now there's litigation down in Arkansas about one of the county clerks not wanting to provide the proper access to it. So another trade association we work with, professional background screeners, they are leading litigation on that, and our association has filed an amicus brief to support the role to make sure that public record information is available, and that the people that need it can get access to it to make informed decisions. Wow. When you don't make an informed decision, you can make a wrong decision, and that hurts everybody in the process.
Yeah. So listen, and I know actually we have some information we want to share. Actually, we don't do decks on these calls, but I think it was an important. Terry had a couple of points that he wanted to get across. You tell me when you want to launch it, but I want to also talk about another way you were impacted by the coronavirus. So, Terry, I hope you don't mind me sharing this, but you also have a farm. So tell us a little bit about your farm, about the steer that you're raising, and how it's coronavirus has also impacted that too.
Oh yeah, well, we are broadcasting from Central Illinois. Very easy to social distance down here. My closest neighbor is about 3/4 of a mile away, and we've got more cows in this county than we have people, and we've got about 20 of them roaming around our neighborhood here. And yes, it is everything you've heard about challenges in meat processing and the food distribution, whether you're one of the largest suppliers or you're just a hobbyist like myself, we're all being impacted, and it is a challenge.
And it's amazing. My wife told me this. She said a long time about, like, like in January, said our food supply is going to be impacted. Like, what are you talking about, this coronavirus? I don't even understand what you're talking about. I still thought Corona was a beer at the time. And yeah, sure enough, here we are. So tell us a little bit what's happening actually, with actually, the meat processing plants, and how actually it's impacted, your steer.
Well, the big, everyone's heard about the big processors that have had COVID breakouts and that have had to go offline. And when those massive plants go offline, the small meat processors that might only have 5 or 6 or 25 employees that typically deal with smaller beef producers and pork producers, the bigger farmers, the big corporate farmers are coming in and booking just a whole, months or a year's worth of time slots for them, where the smaller producers are having a problem get in. A company that we normally use at the start of this month was typically with a backlog of only booking about 3 or 4 weeks out if somebody wanted to process an animal, and now it has gone to, they are booked for until September, and a couple others are booked a year in advance now. It's crazy.
Wow, that's insane. That's
speaking of your wife, please give her a hug for me tonight. I mean, for the people that don't know, she's a nurse. She's been on the front lines of this in New York, and I can only imagine the impact the human toll has taken on her and everyone else in the front line that are just seeing, horrific ramifications from this. From myself and all of our members, thank you to her and all of her co-workers who, again, I can't imagine what she and all of them have been put through trying to deal with this, especially in New York, where you guys have been the epicenter.
Yeah, and I say fantastic, because I actually now have a reason to have Barbara to watch this. I say, hey, listen, we talked about you, even though I've talked about her a few times on this, because she was there's a handful of people that we've talked to on this that saw this happening in back actually in January. And we had QLMS, one example. QLMS in January, they sound the sirens and said, hey, listen, just in case if this does happen, let's get ready. And we have a couple of other people that we talked to that started buying computers. There's no shortage of people that saw the thing, and my wife was one of those people. That's why I'm in a house with lots of refrigerators full of meats. So yeah, we were hoarding actually before everyone was hoarding the meats. So listen, I'm going to go. Let's go back to the purpose that we came to talk about. So we wanted to talk about the COVID-19 impacting uncredited files. So if you're ready, I'm going to launch the screen share. All right, guys, I'm new to this, so hopefully I'm not going to screw it up here. Here we go. 5, 4, 3, 2, 1. Oh, we did it. Fantastic. I didn't screw it up. Hopefully people are still with us. Oh, yeah, I see. We have all our fans are here, both of them. All right. You tell me when you want me to advance. And
go ahead and flip it. That's just the cover screen. And there's a lot of information. So I thought it would be helpful to have this help walk us through it. And then this is a leave behind. People can go to the NCRA website and see this, as well as other resources that we have on our website. So obviously we're in a strange new world, uncharted waters, and this is, besides the human toll, the economic impact of this is really mind-boggling. If you think about everything that economically happened just a little over 10 years ago, when we had the financial crisis in 2008 in the mortgage industry. Right now, where we are at today, the federal government has spent about 300% more than the cost of the economic impact in 2008.
Oh my
TARP was like $700 billion. We're looking at approaching $4 trillion right now is the number that I heard most recently in the economic stimulus and cost.
Wow.
And it's going to get bigger before we are done. There's no doubt about that, because I call it the Corona constant. There's only one thing we know about today, and that's something that you'll hear me say a couple different times. What we know as fact today is probably going to be wrong tomorrow or by next week or next month for sure, because we've seen that with the information originally coming out of China about the COVID-19 virus, and from the World Health Organization and the CDC, and everybody being well-intended and trying to do their best. We're learning about this as we go through it, and we're going to talk about the way it is today, specifically with regards to credit reporting. But there's already discussions on the Hill about CARES Act 2, and while what we're going to talk about today is protecting consumers' credit using the tools that have been time tested and have been built into the system for a couple of decades, with an election year especially coming up, and a very hotly contested election where you have the two parties more divided than ever before, you're going to see changes. You're going to see, before this is over with, I predict there's going to be massive amounts of change on our industry and many other industries. So the way we ultimately deal with this might not be the way we're going to talk about today, but we're going to talk about it today because that is the reality we are dealing with today.
So I'm curious if you can. So we just got this question from Joel Berman. I know you're very well. So he said, forbearance, is it a blessing or a curse for consumers?
Oh boy, that is a really good question, and like so many things, it depends. It depends on, first, is it a government loan or a non-government loan, and how it's reported. Make sure it's reported properly, and how it's repaid, and that's going to go into some of the details we're going to go to. So let's flip the screen, and let me do a little disclaimer before we flip the screen. I'm not an attorney. This is not legal advice. So make sure, if you're a lender or a loan servicer and you're looking at some of the things I'm talking about, make sure you do get good legal advice, because there's a lot of decisions you have to make, and I'll help you get to the right resources. So right here's a little of the timeline. Obviously March 13th, this became officially a national disaster with the presidential declaration. Some of the key dates for credit reporting COVID impact: March 22nd, the interagency statement encouraging financial institutions to do loan modifications and to work with consumers to try to lessen the financial impact. Then the biggie, March 27th, that's when the CARES Act became law. That was the first of what I would say is going to be many, probably, stimulus packages and acts passed by Congress and signed by the president to deal with the impact of the coronavirus.
Yeah.
And then another one important to us, April 1st, was when the CFPB made a statement to provide guidance to the consumer reporting industry and the lending industry about what was in the CARES Act.
Yeah.
So we can go to the next slide. So that first one we talked about, this is basically all the major federal agencies, plus the Conference of State Bank Supervisors. And as mentioned, they are encouraging the financial institutions to work with consumers. As Joel pointed out, forbearance, is it a curse or a blessing? If you don't have a job and can't pay your mortgage, it's certainly a blessing at the time to not have to worry about making that payment and an eviction process starting. But there, as his question makes you think, there are ramifications, right? Nothing happens in a vacuum. So those payments are going to have to be made up somewhere. So let's go to the next slide.
There you go.
The CARES Act. This is what created all those checks that went out to folks. This is what also modified the Fair Credit Reporting Act. So the law of the land that is so important to our members and to all the financial institutions in the United States about how they can report the good, bad, and otherwise for a consumer's payment history, that was altered in Section 4021 of the CARES Act, and basically this codified in federal law what the interagency statement started. We can go to the next slide. And then the CFPB, as mentioned earlier in April, they provided additional guidance on that. And they pointed out that the information really needs to be documented properly, and that the lenders and the servicers need to recognize their responsibility to get this right, and encourages them to work with the consumers and to properly report how they are working with the consumers, whether it's the deferred payments, whether it's forbearance, whether you do full modifications. There's a variety of ways that it can happen depending on the loan type you have, whether it's a federally backed loan or a private money loan. That makes a big difference. And it also, one of the things that was pointed out in the CARES Act, there was some recognition to the difficulties that our industry is dealing with and that the lending industry is dealing with. And something we talked about at the beginning of the show, getting the public record information under the limited timelines. There was a little bit of a safe harbor that was built in for both lenders and the credit reporting industry to protect them, as long as they're showing good faith and they're doing everything possible to meet the timelines required under federal law. Because clearly this is just uncharted waters, and everyone is trying to do their best, but there are some things that just cannot be done today in the COVID-19 world that we did all the time prior to this situation starting.
No, Terry. I mean, and not to jump off our presentation here, but I'm just curious. Are there lessons that were learned from 2008? And I guess, yes, I know, completely different crisis. That was the financial instruments were the thing actually that created the financial collapse, whereas this is just an outside thing. But were there lessons that were learned from 2008 that have stopped actually some of those mistakes from happening this time around?
Well, some of the things credit reporting related that we'll talk about go much before 2008 that were in place. The protections for consumers to make sure their file is not impacted negatively from deferred payments and forbearance, that's been out there for over 20 years. That was in place prior to 9/11. And those disaster codes have been utilized many times, not only with 9/11 and Hurricane Katrina and Hurricane Rita and the massive fires out in California, tornadoes, floods, that has been done. But I think the biggest thing out of the financial crisis that has an impact now is actually some tools that the federal government is using to help keep our economy going that were created under TARP. The TARP Act that pushed that $700 billion into the banks and the Wall Street firms to keep the money flowing, to make sure pension checks were still getting paid, because let's face it, that's where this really meets Main Street.
Yeah. Remember when
issue.
Remember when that seemed like a lot of money?
Oh yeah, yeah. Now we're talking $4 trillion.
Yeah.
I mean, only in Washington can you talk about numbers like this. But what people need to really remember is this is not bailing out Wall Street. This is being done to bail out Main Street, because when somebody doesn't pay their rent, when somebody doesn't pay their mortgage, those obligations, as I used the phrase earlier, nothing happens in a vacuum. Those payments have to be paid down the road.
Yeah.
So what's one of the biggest investors in mortgage-backed securities? Pension funds. So I think there's pensioners out there that are relying upon getting that check, that if the rent's not paid and that mortgage payment is not paid, that pensioner's still looking forward to their check because they've got obligations just like everyone else. And that's what I think is missed a lot of times. Let's go ahead. I think we're ready for the next slide.
Got it.
So all of this, what does it mean for consumers? Well, the first thing, if you're still working, this is not a hall pass. If you can pay your mortgage, pay your rent, pay your car payment, by all means, pay it. Don't use this as a reason to try to skirt around your obligations, because there will be ramifications for that. And the American economy can least afford right now people not paying their bills that can.
Yep.
However, if you're really in financial trouble, make sure you go to your lender and talk to them before you miss a payment. Yep. Make them aware of your financial situation, and also make sure you ask and completely understand what is going to happen to these missed payments. Understand, if you don't know what forbearance is, what that is, what it means, any deferred payments, partial payments, there's a variety of options that can come into play. Completely understand what is going to be your obligations, because this is not freedom from the payments.
Yeah.
Whatever payments are missed or skipped, they're going to have to be made up. And again, depending on the type of loan, your lender, there's a variety of ways that can be made up. So consumers need to make sure they understand what this really is, what it means, and how it's paid back. And the protections are there.
And we don't know how it's going to be paid back. Like at the end of the forbearance, we don't know. Like there's no given, or there's nothing necessarily certain about what the options are going to be. I mean, well, listen, is it possible that, I guess, right now we don't have to prove hardship, but at the end of actually the forbearance period, the lenders could say, all right, listen, if you want to be considered for a loan modification, we want to make sure actually that you legitimately, were impacted. So we want to see some hardship documentation. Oh, you don't have it? No problem. Just give us the payments that you deferred, that you didn't pay us. Give it to us now, lump sum, and we'll start to resume your mortgage. I mean, like that's a scenario that could happen.
Yeah, I mean, especially if it's private money. With government-backed loans, it's different, because there's more mandates involved, because being a government-backed loan, whether it be Fannie, Freddie, FHA, VA, Ginnie Mae, the government, when they're providing these guidelines, can put in restrictions. But if it's purely private money, you could end up with a balloon payment due. So, you need to talk to your lender, to the loan servicer. You need to understand what really is happening.
Yeah.
So, the good thing, go to the next slide, the U.S. credit reporting industry has been built for this. And we talked about this a little bit already, but for more than 20 years, there have been special codes built in to the system to help protect consumers' credit history during disaster. Oh. Those special codes are called the Metro 2 coding system. And that is basically the computer language that the national credit bureaus and every creditor that reports to them talks to each other in. These codes, when properly applied, make sure any of the accounts that are tied up in this natural disaster or declared disaster, they are deemed neutral. So whether it be FICO or Vantage Score, those scoring models look at those accounts in a neutral way so that there's no impact to the credit score.
Wow.
For the consumer.
So these are almost like circuit breakers. So if this kind of event happens, circuit breaker switches, so you don't, so the borrower doesn't actually get looked at as negatively because they missed the payment because 9/11, because COVID-19, whatever it is. That's what these circuit breakers are put in place for.
Yes, and they're usually put in place just for a small geographic area. So when Hurricane Katrina hit, the area that's declared a disaster area, those consumers are protected for the period of time that disaster is impacting that area. The fires we've had out in California, here in the Midwest where we're at, where we've had horrible tornadoes.
Hurricane Sandy.
Yeah, Sandy in your backyard a couple of years ago.
Two doors down from us. Two doors down from us, the water came up. So
yeah, absolutely. Earthquakes.
Yeah.
Natural and declared disasters. This system has been in place and works very well. And we'll get into details on it. Let's go to the next slide.
Great.
So if you are a lender or a loan servicer, you are going to first make sure you talk to your legal and compliance team and come up with a COVID-19 plan. You might need, if you're a big servicer, you might need a couple plans. If you have both government-backed loans, you've got Fannie Freddie loans, or you've got FHA VA loans, and then you've got some private money loans that you're servicing, you might have to have two plans. But there's business decisions you're going to have to make as a lender or loan servicer, and you need to make sure you talk to your legal counsel and your compliance team and understand how you put the best plan together. I should point out that you only want to address the loans that are really requiring deferred payment or forbearance. Really, I know I've heard of some servicers that are saying, since this is a national disaster, why don't we just code everything in our portfolio according to the disaster? You really don't want to do that. If you're thinking about that, make sure you have a deep conversation with your counsel about that and talk to the credit bureaus that you report to. And of course, along with talking to the credit bureaus, the Metro 2 is developed by the Consumer Data Industry Association, and besides going to whichever one of the big three or all of the big three credit bureaus that the lender does their reporting through, there's also the Metro 2 Help Desk, which we have a link right there that is a great resource for them. So we can go to the next slide. There's a couple different options depending on the route that lender or loan servicer wants to go. The first option is the special comment code AW. That is the natural declared disaster. And we're not going to get into a ton of the details here because we've got a variety of folks on the line here, but there's kind of a little summary about what the lender or loan servicer needs to do. They need to report the proper account status codes after they report the AW. They want to report any payments that were made or payments that are deferred. This works for both open and closed accounts. This works for current or derogatory accounts. This is really addressed well in the CDIA manual on how to do all of the reporting, the credit reporting resource guide, and specifically the AW code is addressed in detail in the FAQ 58. So there's a link there And again, the Metro 2 help desk, if you are a loan servicer, only loan servicers who have accounts with one of the three bureaus or all three of the bureaus need to use that help desk to understand any detailed questions about how they report.
So, by the way, and I'm sorry, maybe you said this and I just missed it. What does AW stand for?
That's just a code for the natural or declared disaster.
Okay.
So some of these, there's so many different scenarios. You got to think about this. Every possible scenario for every possible type of credit decision is trying to be addressed. They're not trying, is being addressed. So sometimes the codes have a direct correlation to something that they make sense, and sometimes they're just letters and numbers that are assigned, and there's no direct correlation.
Oh, wow.
This is the disaster recovery code.
Yep. Got it.
So you can go to the next one. This is the other option, and this is the CP, special comment code. And you handle this a lot of the same ways as you do the AW, but this is specifically the one for forbearance. So if the consumer is making reduced or interest-only payments, and you do have a formal forbearance program, this is the one that would be more appropriate to do the reporting under. And the reporting here, like I said, it's very similar to how you handle the AW, and there's a little bit of differences, and they're addressed in FAQ 45. And on both of these, if you do have a full deferment, and this is going to be important for the originators in checking to make sure things are reported right. So if payments are completely skipped or deferred due to this, we'll talk about how the lender would put in a D in the monthly payment history instead of the 1, which means paid as agreed, or the 2, which would be 30 days past due. And we'll cover that a little more in depth later in this deck. So key issues for mortgage originators. The first thing, as a mortgage originator, be assured that the new tri-merge mortgage credit report you get from your CRA, or if you're a property manager, the credit report that you buy from your resident screening company, whatever the situation about the consumer that was reported by the lenders, if it's reported properly, is going to be passed along just as reported by the reseller. We are required, resellers required by the NCRA and by our contract with the bureaus to make sure we pass that information through fully and accurately. So we will be passing along any of those disaster codings just as they were reported to that specific repository by the lender or loan servicer. And that's where I think for mortgage originators, if they're looking to try to help a consumer refi, and it's within that 24-month window where those deferred payments would be showing up in the sticks. And it's my third bullet there for those loan originators that are used to this. You would see up to 24, hopefully up to 24 ones in a row, meaning that consumer has paid that loan as agreed every month. And if they were 30 days past due, there would be a 2, 60 days a 3, and if there was a skipped payment or a deferred payment, you would see a D. So that is a tip to the loan originator that the lender did report an AW or CP code, and that this consumer was impacted by COVID-19, and the lender did report it properly, and that's all going to be handled in a neutral basis by the credit score.
Right. By the way, is there anything that would prevent, and this might be more of a lender question, but prevent a refi during during the forbearance period. So let's say someone actually either made the dumb mistake of going actually to a forbearance when they just, because they weren't aware. Because listen, I mean, if you go to pay your mortgage, if you go online to pay your mortgage, the button to pay your mortgage is right next to the button next to forbearance. It's just, it's like you see it right there. Like it's tempting. I actually, and I happen to go on to pay my mortgage today. I was like, I wonder what would happen if I click this. What would happen? And I get scared. I'm like, well, what happens actually? Because it's just so easy. I don't even want actually to be considered for that. So if you go through a forbearance, is that going to stop you from being able to potentially get a refi? So let's say you didn't have a loss of income, and you applied for that forbearance.
I'm not going to go there.
So it's a lender question.
Yeah, it's a lender question, and I've heard some things from some loan originators out there that there has been some issues, and there's been policy changes, and that is a lender question.
Yeah.
Now, one thing also that I will point out with, and it kind of gets to this, while the impact is neutral on consumers when the AW and CP codes are used, talking about lender issues, as of right now, it is possible that an underwriter or a loan origination system is going to look at somebody who has been in forbearance, and they can tell it from those Ds, or they can pick it up off of the codes. And while the score is neutral, it's not unreasonable that a lender might look at that and say, well, this consumer had to go into forbearance anytime a lender is not being paid as agreed because of the payments they have to make downstream and because of the additional burden that puts on their loan servicing department. Because again, the insurance companies, they need to be paid for keeping the insurance, and the taxes need to be paid, so the escrow moves on. Again, nothing happens in a vacuum, so that is not unreasonable for some lenders to look at that and say, hey, maybe I'm going to ask for a little more of a FICO score, or maybe a little more cash reserves. There could be some impact from this, even though there is complete neutrality from a credit score perspective. And again, that gets into underwriting and lender question, but that is a possibility.
I mean, just to say, actually, it doesn't impact your credit score. It doesn't make a difference. I mean, it's listen, FHA doesn't even, the credit score doesn't even factor into an FHA deal. It just happens to be lenders overlays that really actually come into play when it comes to the credit score. Thank you that you're not impacting my credit score, but the lenders are still going to actually look at this and see those Ds and know actually that, you went through some difficult times, or maybe didn't go through some difficult times. So it's,
and that's why I make the statement, if you're a consumer,
yeah,
and you are working and you're not being impacted, pay your mortgage, pay your car payment, pay everything. As long as you're not financially under hardship, do not take advantage of any of these blanket applications out there that are available right now, because as you pointed out in the beginning, you don't have to document hardship. All you have to do is raise your hand and say, hey, I can't pay, and you don't have to prove anything. But that might change down the road.
Yeah.
And just as we're talking about this right now, let me toss out there the COVID constant. What we're talking about, there might be changes coming up that would prohibit everything we talked about from happening. I've heard all kinds of different scenarios from both sides of the aisle in both the House and the Senate, and especially in the political environment we are in right now, when you have very conservative members of Congress talking about ways to bring additional relief beyond what we have in place right now. And then you also have Chairman Waters from the House Financial Services Committee, and a very long history of being very consumer friendly and incredibly concerned about the impact that this is going to take. There has been all kinds of scenarios. Locking someone's credit report down from the way it was listed at the end of January or the end of February until this is over. There's the only thing we know for sure, there's going to be a lot of legislation from this before the end of the year. There's going to be additional stimulus needed to keep the economy rolling, and it's very, very likely that there's additional protections built in to limit the impact as much as possible on the American consumer, because this is just a tragedy beyond comprehension. I mean, I never thought in my lifetime I would live through the 60 days we've just recently been through, and in suburban Chicago, I don't think we will be approved to go back to work on a regular basis due to what's going on in Chicago and with what Governor Pritzker has stated. I'm thinking it's probably going to be mid-June. I think is a realistic date when I think I can get my staff back in our office and we can get back to some sense of normalcy, if there is one after this.
And now, do you think that's appropriate? Let me ask you. People that have had the coronavirus, right?
I do know some people that have been impacted. Not anyone very close to me, but yes, I do know some people that have had it. My wife and myself and some of our friends, we might have had it at the end of January, because we all ended up getting a flu that lasted over 3 weeks in January that was the worst flu I've had in my adult life. And two of our friends were deemed that they had the swine flu. So I don't know if it was swine flu or if it was this in hindsight, but some of the loss of taste and the respiratory impacts sure make us suspicious.
Yeah, I just listened to yesterday. Listened to the webinar that I did, in the end of January, with DocuSign, where it was my worst webinar I've ever did, because I couldn't breathe. I couldn't breathe. Like you listened to my voice, and it was so troubling to listen to me. So I think a lot of us had it, and I think so. Do you? With your timeline, do you feel like we should be going back earlier? Like if it was up to you, if they opened up tomorrow and said like they did in Georgia and some other states, if they said, all right, listen, Illinoisians, what do they call you guys from Illinois? Illinoisers, Illinoisans. Okay. You're annoying me, Illinoisans. So the Illinois, that you can go back to work, do whatever you want to do. Are you taking everyone back into work?
It depends on when they do it. We have a small staff, and we have a pretty good amount of space where we can socially distance in our office. And that's a really complex question for Illinois, because Illinois is like many states, but not all, where we have a very diversified population. Obviously with the city of Chicago, you've got one issue with Cook County. You have one of the most populous counties in the country, which is the city of Chicago, plus a couple hundred suburbs, some of them very remote, that are on the far outskirts, that have a totally different reality than the city of Chicago. And then you have downstate, like the county I'm coming to you from, where there's like 10 times as many cows and pigs as there are people. There's only 3 cases, none confirmed, in this county. So that's a lot different than what you have even in some of the smaller cities like Peoria and Springfield and Bloomington and my hometown, Kankakee, Illinois, where even though that's 30,000 people in a 100,000 metropolitan area, has unfortunately been hit very hard and has several hundred cases and way too many deaths. So it's serious, it's tragic, and I don't think there is, or at least that we know right now, what the right answer is.
Yeah. All right. I apologize for the little digression there, but bring back the presentation there.
Well, we can go back. I think we've wrapped it up except for questions. So if anyone has questions, you can bring them on now.
Yeah, fantastic, everyone. If you want to hit us up in the comment box here, feel free to ask any kind of questions that you might have. So actually, we'll something. We'll leave this slide up on there for just a little bit longer. So if anyone just wants to reach out to you directly, if they got questions, they can reach out to you directly. Go to the NCRA website. By the way, something. Let's talk about actually a funner time actually when you and I were meeting. I love this. This was like one of the coolest things actually that I did in my career was when I had this opportunity to do this with you guys. I don't know if the audio is going to play, but I'm going to put it on anyway. This was just so much fun. As a series that we did with Rick Grant. This was just a lot of fun. Can you hear this?
No, but we can see it. The NCRA Man on the Streets video. And yes, we did have a lot of fun in Times Square actually asking consumers and answering consumer questions about the credit reporting industry. So, yeah, thank you for bringing that up. And that was a very fun day and a great experience for myself and many of my members that traveled from around the country to go down to Times Square and deal with real credit reporting issues from real consumers.
Yeah, listen, I came up with this idea. I didn't think you guys would take me serious. I remember I said this at night at a cocktail party. And in the morning, you guys, I sat around and said, Andrew, come here. We like this idea. I'm like, wait, we can't really do this. We can't just go into Times Square. And you guys had the resources. You said, let's do it. Let's make it happen. You had a bigger picture, a bigger vision, and it was great. And these are the kind of things I think that's great. Actually, the great things that NCRA does, because there's a lot of actually great things that NCRA does besides actually, the dealing with the uncertain times like this. I think this is just like the consumer education, consumer outreach, and that's actually one of the many things actually why people should plug into the NCRA world and at least actually follow them, connect with them. Love your events. One of your events are always great events. When's your next event scheduled? And I don't know if
hopefully we will be in Tucson in November.
Tucson in November. That's promising.
We are crossing our fingers that the world is back to normal and that we can gather as an industry for our 28th annual national conference, and that we will be bringing the industry leaders along with our key regulators and address some of the most important topics of the day like we try to do every year.
So give me an idea of what kind of regulators come down. Like give me for at past NCRA conferences, which listen, I found actually I've been to the NCRA events. I mean, great events, so informative. So tell me actually, who are some of the guests that you had at past NCRA events?
We've had, historically, the FTC and the CFPB being our primary regulators. We always want to hear from them. I kind of look at talking with them at our conference as kind of a state of the union for our industry, covering the most important events that have happened in our industry over the last year and us checking in with each other about where we're headed in the future. HUD, just Fannie, Freddie, the regulators, the mortgage industry, the resident screening industry, key individual players, the folks from FICO and Vantage Score, the folks at Credit Expert that provides the what if simulator to the mortgage lending industry. Right after the Equifax data breach, we had the chief technology officer from both Experian and TransUnion, the worldwide chief technology officers, on our stage doing a reminder for everybody about what the reseller industry needs to be doing, which we'd done it a few years before to make sure they were doing everything possible to prevent data breach. But, data breach is that is something that everyone is subject to. And one of the things that I think Mr. King from Experian pointed out that is so correct. The three bureaus and some of our members are bombarded thousands of times a day with attempts from hackers trying to break into our systems and steal private consumer data. Wow. And we have to be right every time. And the data thief has only got to get in once. And then we're in the headlines for the wrong reason.
Wow. And I mean, when you look at back at what happened, with the Equihacks,
and that was done by the Chinese government, according to the Justice Department.
Yeah.
If you remember that headline about a month ago.
That's right. That's right. We brought them up on charges, right?
Several people within the Chinese military that stated that that's where they believe, and of course the Chinese government has an issue with that. We, over the years, we have seen a variety of changes to the hacking attempts. They used to come back when there was a lot of disruption and war in the former Soviet blocs, Serbia and that part of Europe. That was about 15, 20 years ago. That was kind of the epicenter of the hacking attempts.
Yeah.
That has moved, and hacking attempts now are more focused coming from Asia. And of course, the hackers are using the greatest possible attempts to hide where they're actually coming from. Sometimes successfully, sometimes not. But it is an issue, and some of them come from within our shores as well. But there's a lot of breaches centered offshore.
In China, you have a building dedicated, to fostering, the hacking of systems. I mean, so it's not just like, here you have splinter groups that are, kind of funded by either malicious intent or financial gain, not actually, world domination, where a government, who's not accountable to anything. And now we're also all of a sudden going into a political discussion here, but it's something that just we need to be mindful of this. We need to just be aware of this, and what we do with that information is another thing. I just realized we're almost on an hour here, so we're gonna wrap this up. Listen, I could sit here, Terry. I want to ask you more questions about actually the impacts on our credit files. I want to ask you more questions about steer, raising steer. What's your favorite cut of meat? And how much meat comes out of a typical steer? How much meat comes out of how much a big steer that you have that you saw in the picture in the background? How much meat is coming out of that?
That's a very long conversation. Like so many credit things, it depends. Is that a grass-fed steer? Is that a grain-fed steer? And since we are 1 minute away from being in an hour, you and I will have to have that conversation over a cocktail. And I promise I will not use a slide deck.
Fantastic. All right, beautiful. Well,
I might bring a chart, though, because the chart of where all the cuts come from does help understand it.
Yeah. Fantastic. Beautiful. All right, listen. So we're going to wrap this up. I just got a in my ear that we just hit 5 o'clock. So Terry, thank you so much for joining us. I'm just going to flash actually Terry's information up on the screen here again. Go check out that website. Go actually, give him a call like during this time actually, since, you're staying at home. That phone is being directed to your cell phone, I assume.
Yes. Well, no, that's going to our office staff, but they know how to get a hold of me. T Clemans, Clemans at NCRA.inc.org is my email. It's my email, and everything is available on the website. And yes, we are working. And if anyone needs us, please reach out. And for mortgage lenders and property managers, you can go to our website and find our members to find a consumer reporting agency that will take very good care of you and provide you customer service right from many times your local state and region.
Fantastic. All right, Terry, stick around for a sec. I'm just going to take our viewers out here. All right. Again, everyone, thank you for joining us for another Mortgage Leadership Outlook. Next week's lineup is insane. I can't tell you. I can tell you. I mean, I should tell you. So we have actually starting off the week, Steve Schnall from. Oh my goodness, drawing a blank on the name of his bank. It's a New York-based bank, huge in non-QM, and they're doing some very interesting Quantic Bank. I just wrote down his name, but Steve Schnall from Quantic Bank is going to be on Monday. Then we have let's see, that's right, Kevin Delory, the newly named Senior Vice President of Wholesale and Correspondent for Carrington Mortgage Services. Kevin Delory is going to be joining us. There's no question about it. He's one of the best dressed men in the business, besides actually being one of the brightest people and such a dedicated hero to wholesale. He's starting up, and then actually coming up, and another Kevin. We've got double Kevins in a week. KP, Kevin Perenio from PRMG. So excited to have Kevin on the show. Kevin, actually, hopefully you're following some of the videos that he's been doing on LinkedIn. I mean, if you're not, go follow him now and make sure actually that you connect with him. He's been doing some unbelievable updates on a sometimes daily, sometimes a weekly basis, where he's sharing the insights of that he's seeing within his organization. One of the things I loved about PRMG, they have a well-respected both retail and wholesale platform. So he's sharing actually his insights that he's seeing from both of those. He's also, I'll tell you this, another great thing about it is he's got Gary Malis, who's kind of head of their capital markets, sits actually a few feet away from him. So he's giving the updates from the capital markets, and then we're wrapping up the week with the former president and CEO of Ginnie Mae, Ted Tozer. So Ted's doing some work with the Milken Institute, talking about actually some of the things that are going on with the private labeled securities. So we're going to wrap up next week with Ted Tozer's interview on Thursday next week. So thank you everyone for joining us. Remember, we're doing this every day, Monday through Thursday, 1 o'clock Pacific time, 4 o'clock East Coast time. Thank you so much for watching. Please like, subscribe, share, do whatever you need to, comment, make sure actually as many people are seeing this as possible. Thank you so much. And thank you so much to the AmBiz team, who's just creates actually helps us actually put these contents together, writes articles about this. Make sure you check out National Mortgage Professional Magazine. We have a new redesigned magazine coming out next month. Lots of exciting things going on in the AmBiz world. Just thank you all for watching, reading our publication. Have an excellent day. Take care.